Hey guys, in today's video, we're going to talk about how we've been trading after the Brexit situation. Hey traders, Akil Stokes here, Chief Currency Analyst and Head Trading Coach over at TradingPower.com. And thank you once again for joining me for another one of my weekend review videos. Yes, you are noticing something different this week. I am on two different channels. Not only am I on my regular YouTube channel, but as Charles Miles mentioned in last week's Forex Market preview, we're now combining all of the educators over at TradingPower.com under one umbrella, which means you'll get to witness different personalities, different perspectives on the markets from various educators all on one site, which I think is going to be pretty cool. So if you're a normal subscriber, again, you can check either this channel or my normal YouTube channel for these videos. And if you're new, and this is the first time you're witnessing me or getting a chance to see me, I am the head Forex trading coach over at TradingPower.com, and each and every week I try to provide a video either teaching a lesson about psychology, showing you some of the stuff that we looked at in the market during the week, or maybe even talking about a trading opportunity that is to come. And that's exactly what we're going to do in today's video. Now, if you've noticed, the markets have been kind of messy after the Brexit. However, we've done a pretty good job this week of finding trading opportunities, which is pretty exciting. Last week, I essentially took the entire week off as I wanted to have all money in cash, meaning nothing active in the market ahead of the vote. And now that that's over with, it's time to get back to business. And like I said, we've been pretty busy in the syndicate between Jason Stapleton and myself. We've taken about, I think, 11 or 12 trades, and we're having a pretty decent week as well. Now, the approach has been a little bit different because the markets are a little bit messy and they are going to take some time to kind of correct from the hundreds and hundreds of pip moves. What we've been doing in the live trading room is really focusing on the smaller day trading opportunities. So although we've been going through our normal IPDE process, identify, predict, decide, execute, we've also added a different type of chart to our analysis, which is the range bar chart. And the reason we've been doing so is because it gives us a different perspective of the market. It takes a little bit of the junk and cluster, for lack of a better term, and makes it more readable as you get a more pure look at price action. So what I'm going to do is I'm going to show you a clip from Wednesday's live trading room where we took a trade on the pound dollar, working our way down from the higher time frames, and I'll give you a chance to look at how we attacked it once we got back to the range bar charts. Then when we return, I'm going to show you guys that are longer term traders, for you guys that trade daily, 4-hour time frames and hourly time frames, I'm going to show you an opportunity that's on my radar for the next couple of days. So enjoy, and I'll be back in a few minutes. So we're looking here on the pound dollar, and well, the level of major structure is going to be down here. So the issue with that is we can reverse anywhere within here and have it still be kind of valid. So we're gonna have to try and do our best to choose our positions. Previous structure here on the 5-minute, that DSR level on the 515 is gonna be at 3474s. So I think that's a good level to eye up, 3474s, and that's gonna be this structure level right in there. So that's what I'm gonna have my eye on here. We can look for some confluence there. I'm gonna scream out 618 Fibonacci retracement. A little short of that. Let's see, maybe we have a Fibonacci inversion in there. If we can pass this level, this would be the first level to look at. All right, so we have a 618 and a 1618 right in this level, and that's the level again of the higher time frame structure that we just broke. So that would be, I don't want to say the ideal level. This would be the level that I would expect to get hit. There is going to be an opportunity right here if we come to this level of structure, especially if this is a strong trend. Again, the stronger the trend, the more shallow the pullback. So if we're going to look for opportunities, I think the first place to look for is going to be right here. Ah, man, we have this too. Well, the first place to look for is going to be right here. The second place is going to be right down here. And you'll see that, again, what I do is it's not complicated. I typically do the same thing each and every day. You know, I don't have that. I analyze the market. I'm pretty consistent in how I analyze the market, so it's going to be the same thing every day. Just sometimes it gets fast, especially when the market throws you some curveballs. So we'll see. Yeah, and Jeff said, yeah, Kiwi is filled as well. Yep, on the dollar again. All right. You guys got any other questions before we head out? Got about 3 more minutes. Again, I want to close shop today by about 10:45. That way I can put on some decent clothing and get ready for meeting. All right, so for you guys that are longer term traders, here's an opportunity that I have on my radar, and there's actually a lot of moves like this. Obviously, the Brexit vote caused some pretty big moves in the market, pretty big reactions, or as we've been talking about, overreactions, but that's not technically based at all. It's an opinion. But anyway, we've seen some big moves in the market, and although, again, the recent reaction to it has been that the market is coiling, we know that coiling leads to an expansion. I don't know if that expansion is going to be up. I don't know if that expansion is going to be down, but I would expect some type of expansion in the market, potentially a breakout or something of that sort. And there are a few pairs on the 4-hour charts and the hourly charts, including here on the New Zealand dollar. I know the Euro dollar has one, Aussie dollar has one as well, where we're setting up some moves for advanced pattern formations. And if I click my new pattern assistant tool up here and draw it out, you're going to see our swing high right above, a little bit below 73 cent even. Our swing low to swing high, or swing high to swing low, I should say, is going to be our X to A. Our initial reaction from the Brexit vote is going to be our A to B. And then as the market coils down and down and down throughout this week, we've actually put in a C leg for a potential advanced bat formation, which would complete right up here around the 72.60 level. So again, I don't really start looking at these patterns seriously until we break past the B leg. But if price action were to expand up, the next shorting opportunity, for me at least, on the 4-hour time frame here on New Zealand dollar would be the completion of our advanced bat formation up at 72.60s. And again, this is happening on a few pairs out there. So one of the things that we've been focused on is not over trading, not trying to get revenge, but also not being scared. You know, what we want to do is we want to have a plan. We want to consistently follow that plan, and that means coming into the markets each and every day, doing our analysis the same way, and taking advantages of the opportunities that come our way. We don't want to force anything. We don't want to be scared to jump in anything. If it's there, we take it, we trade it. If it's not there, we wait until that opportunity does come. And that's what allows us not to be gamblers and really sabotage our edge in the markets. So thank you guys for joining me this week, guys. As always, after this video is over, I'll put a little bit of a recording of a rant I did in the live room in the ending credits. But if you're new and you like what you see, do me a favor, leave me a comment. Say, hey, Akil, like your stuff. Glad to have you on this channel. Again, if you have any questions, you can leave that in the comment section as well. A lot of my midweek Periscopes or Facebook Live videos are based off of those questions. And of course, do me a big favor, guys. Hit that like button. Please share this with at least 2 trading friends of yours, or 2 friends that are interested in getting into trading. Our job here, our mission here, is to empower traders and help you guys become independently, consistently profitable. So the more traders we can touch, the better environment it creates, the more positivity that flows, and the more negativity that kicks out of our circle. So appreciate it, guys. I'll see many of you guys in the live room tomorrow. Syndicate members, I'll see you on the trade floor. And until next time, plan your trade your plan. Good luck in the markets for the rest of this week, and I'll see you guys next week. Amelia says, dollar Canada, a long or short? What do your rules say, Amelia? That is not a question for me. That is a question for your trading plan. What does your trading plan say? When you look at your rules of engagement, does your trading plan say it's a situation where you need to get long or short? Or do you not have a trading plan? And here's a trick. This comes from Mike Bellafiore's book. If you ask someone a question about their trading plan, if they can't answer it within like 10 seconds, it's probably not in their plan. Not sure. Well, I can make a reason to get long or short at any given time in the market, and that's kind of the issue, and that's kind of why you need a trading plan, so you have some structure in how you're trading. Now, if you're not sure, it means you don't have a plan to involve yourself in the trade. If you don't have a plan to involve yourself in the trade, I think the best thing you can do is to stay out. If you want it to get long, you need to ask yourself, what type of trader are you? Are you a trend continuation trader? Are you a counter trader? You need to know the reasoning for getting long. We can't just get long or short just because we want to, we feel like it. We have to have a reason. We have to have a technique, a strategy that tells us we have an edge at this moment. If we don't have a strategy that tells us the market is giving us an edge at where it's at right now and whichever direction we want to go, then I don't think it's a wise decision to be involved in the trade, because it's no better than gambling. So we have to separate the I want to get long, I feel like I should get long, from the can we get long, based on what our rules of engagement tell us. And if we don't have rules of engagement or a trading plan, we need to play the sidelines. We need to continue to learn how to trade, continue to build our skill of technical analysis until we're able to develop some rules, backtest those rules, and eventually trade those rules in the live markets. But there could be a trend continuation or a counter trend trade here. I can make a case for both. If I want to get short, I can say something like this. Here's previous structure lows right here. Down at 129.66, market has not touched it yet, so there's a good chance that we can continue down and retest previous structure lows. If I want to get short, we have a 127 inversion right here. You can see Fibonacci retracement or extension, swing low to swing high backwards. We hit a 127. That's going to line up with a 1618 as well. Swing high to swing low. I've got Fibonacci confluence at this level. Chance to get short, right? Markets held this shelf right here. Look left, structure leaves clues. We can get short in anticipation of the market coming down here. We can have stops above previous structure highs right here. If I want to get long, I can say this. Well, we have a double bottom down here. Market has tested this level. Market has retested this level, giving us a double bottom. Boom, boom, boom. We've broken and closed above the highs. What do we look for after a break and close above the highs of a double bottom? We look for what type of trade, traders? Shout it to me. 2618, right? So you look for that 618 retracement right back here in the previous structure and a chance to buy it up on a long opportunity. I just made two cases to get long or short, and they both sounded really, really good, didn't they? Yeah, and that's the problem with trading. Not the problem, that's the issue that a lot of traders run into. And then we eventually fall on confirmation bias. We can create whatever we want to see. So if I want to get long dollar Canada for whatever reason, meaning oil news is coming out in a half an hour and I think that's going to affect it, or I read something in the magazine or saw something on TV, my mind can create a reason to get long. And I won't even know it. It tricks you, right? It's this little people talking in the back of your head saying long, 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 long. So you see it and you're convinced to only look for long opportunities, and vice versa with short opportunities. And then what happens is we end up taking the trade, and then, right, we come back, it blows us up, and we're like, oh man, actually I probably should have got short there. Oh yeah, I should have got short doing this. And then we end up in that group of 40 to 50% traders that don't really have any consistency in their trading, right? I read you guys a quote from Mark Douglas the other day, did I? Let me bring it up for you. I put it on my Facebook. By the way, shameless plug, if you don't follow me on Facebook, get over there and do it right now. Come on, it's essential to your life. Where is it at? There's the Ali quote. This is a good one too. Behind every successful trader, there's a lot of unsuccessful years. It's a really good one. New Iceland, parking the bus on England. There we go. Where is it? Here it goes. Mark Douglas said, if I were to classify traders based on the kind of results they achieve, I would put them into three broad categories. The smallest group, probably fewer than 10% of the active traders, are consistent winners. The next group, which consists of 30 and 40% of active traders, are consistent losers. The largest group, the remaining 40 to 50% of active traders, are the boom or busters. They have learned how to make money, but they haven't learned there's a whole body of trading skills that have to be mastered in order to keep the money they make. And that's kind of what happens when you fall into this category. You're going to get the market's either going to do two things. It's either going to go up or down. So whatever way you choose, long or short, you have a 50-50 chance of it going in your direction. And what happens is sometimes you'll win and I'll reinforce what you did. Sometimes you'll lose and I'll change what you did. And you'll wind up basically just kind of treading water and being a break-even trader, right? You'll do just enough not to blow your account, but not good enough ever to kind of take your trading to the next level. Does that sound familiar? Any of you guys? You've been trading for years and your account level is kind of the same. It goes a little bit up, but not enough to really do any damage. And it goes a little bit down, but not down enough where it's like, I should quit because this stinks. You kind of just tread water. And we call that the slow bleed. We call that slowly bleeding out on the battlefield, right? Because typically what happens with that is traders, the losses, your account drains a little bit at a time, and before you know it, you've just bled out and died. So it's a bad way of putting it, but it really is a good example of trading. You're just slowly dying. You're slowly bleeding out unless you do something about it. And that's the importance of having that plan. Having that plan gives you consistency in the market. So when you see an opportunity like this, there's never that question of, hey, do I go long? Do I go short? Right? You have a specific plan that you trade. That trading plan has been tested. It's verified. Right? You've demo traded it, so you know that you can actually replicate it in the live markets. And now when you see a chart, you're kind of ignoring all of the fog, all of the mist, all of the other junk that's happening. And you're only focused on trading your specific plan. And that gives you that consistency in the markets.